Good morning.
Good morning, sir.
Okay, thank you. This morning, we first look at tax identification number and tax clearance certificates. Tax identification number and tax clearance certificate. So that is what we are going to look at this morning first. After that, we can now go to taxation of specialized business. After the tax identification number, we can go to taxation of specialized business. What do we understand by tax identification number? What is tax identification number? Based on this my material, tax identification number is a unique 9-digit number. A unique 9-digit number. It is a unique 9-digit number. Allocated to taxpayer with a view of identifying individual, business, or any other entity in tax return. What tax identification number simply means is a number that tax authority assigned to taxpayer as an evidence for registration of tax. If a company want to register for tax, tax authority will issue the company tax identification number. You as an individual too, if you want to register for tax authority, they are going to issue you tax identification number just to serve as an evidence that you have registered for tax. So that is the whole essence of tax identification number. After that, what are the objectives of tax identification number? Why tax authority issue tax identification number? We should have it in mind that tax identification number is issued by Joint Tax Board. According to the new law, Joint Tax Board is now called Joint Revenue Board.
Yeah. Sir, do not drop the material.
I will drop it. The material is in your combined material, but after the class, I will drop it.
Okay.
So, tax identification number is issued by Joint Tax Board. Based on the new law, Joint Tax Board are now called Joint Revenue Board. They are the one that issue tax identification number. So, what are the objectives of tax identification number? Why Joint Tax Board issued tax identification number? What are those objectives of tax identification number? Number one is to create closer linkage between tax authority. To create closer linkage between tax authority. What that means is that once you are issued the tax identification number, if you go to any state, it is the tax identification number that you use to pay your tax. So, and your tax history can be identified through your tax identification number. So, to create closer linkage between tax authority is one of the objectives of tax identification number. Another objective of tax identification number is to aid cooperation information sharing among tax authority. To aid cooperation information sharing among tax authority. Likewise, too, another objective is also to increase revenue generation accrued to all tiers of government. Tax identification number can be used to increase revenue generation across all tiers of government. So they use it to increase revenue generation. So these are the objectives of tax identification number. Now, what are the requirements for tax identification number? If you want to register for tax identification number as a company, if you want to register it with FRS, you want to register, we should have it in mind. The most recognized tax identification number is the one issued by Joint Tax Board. However, tax authority, FRS, LRS, they issued individual tax identification number. But based on this new law now, the only recognized tax identification number will be the one issued by Joint Revenue Board, JRB. The only recognized tax identification number will be the one issued by JRB. So that will be the only recognized tax identification number. So the one issued by JRB. So if you want to register as a new company, you want to get tax identification number, you will get the one issued by JRB before. You also get the one issued by FRS. But right now, both all the tax authority, JRB, FRS, LRS, they are working together to ensure that we have harmonized tax identification number. And that harmonized tax identification number will be issued by JRB. It is not the responsibility of FRS to issue tax identification number. Likewise, too, it's not the responsibility of any state tax authority to issue tax identification number. The responsibility of issuing tax identification number lies with JRB. But what about those companies that they have already have a FRS tax identification number or individual that LRS have been giving taxpayer ID? What do we do? As I'm talking to you, they are working on synchronization system where all the tax identification number issued by this tax authority, FRS, LRS, is going to be matched with the one of JRB. But for a new company or a new individual that want to register for tax, it is now the JRB tax identification number the person will be issued. So if you want to register for tax identification number under the FRS, what are the documents that will be required? The following documents shall be required for the purpose of registration with the FRS. A, the name of the company. A, the name of the company. B, registered office of the company. C, type of business the company engage. Y, D, a copy of the certified true copy of memorandum and what? Article of association. Certified true copy of memorandum and article of association. Why another one is the name and address of the director of the company. The name and address of the director of the company. This one too is also issued. It's part of the document. The name and address of the company bankers and the external auditors. A copy of the certified true copy of certificate of incorporation. That means copy of the certificate of incorporation issued by the CAC. Letter introducing the tax consultant. Letter that you are introducing your tax consultant to FRS. The accounting date of the accounting year end of the company. The particulars of shareholders, which include their name, the address, the amount of shareholding, the name and address of the principal officer of the company. All these are the documents that will be required when you want to register for tax identification number with FRS. Now, what are the transactions for which tax identification number is required? What this one means is, what are the transactions that if you want to do the transaction, they will ask tax authority to go and bring your tax identification number. Go and bring your tax identification number. The tax authority will ask, what are the transactions if you want to do anywhere that as a company, they will ask you, you should provide your evidence of tax identification number. What are those transactions that if you want to do, they will ask you, provide your evidence of tax identification number. What are the transactions? Number one, open of corporate bank accounts. If you want to open a bank account. As a company, you cannot open an account without you providing your tax identification number. You must provide your tax identification number to the bank before bank can open an account for you. Another one, all transactions with other company on invoice, statement and return. All transactions with other company on invoice, statement and return. If you want to do a transaction with company, you want to deal with company, maybe you are giving a contract, you want to send your invoice to the company that give you contract, or you want to sell good for the company, you want to render service to the company, to other company. That company will ask for your tax identification number. Even in the new law, there is a particular section under the NTAA, Nigeria Tax Administration Act, that said if you as a company, you award contract to unregistered contractor or unregistered vendor, that means if a company award contracts to somebody that don't have tax identification number, such company that award the contract to the company that don't have tax identification number, such company will pay penalties of 5 million naira for awarding contract to unregistered contractor, unregistered vendors, and so on like that. If you understand, that means that is the reason why it is stated that you as a company now, if you want to receive an invoice for any company, the company must include the tax identification number as part of the invoice that they send. All correspondence with ministry and other government agency. You want to do a transaction with a ministry or any other government agency, before they can do a transaction with you, they will demand for your tax identification number. Importation of goods, payment of custom duties. You import a good, you want to pay for custom duty. The only thing Nigeria Customs Service will be used to recognize you when you want to make your payment is your tax identification number. A company that don't have tax identification number cannot pay for custom duty direct. They can't pay for custom duty direct. Obtain receipt for tax payment. You want to pay for tax. You want to get your receipt. Without registering, without having tax identification number, you cannot make tax payment. You cannot issue the receipt. Application for tax clearance certificate. You need a tax clearance certificate. You need a tax clearance certificate. You need a tax clearance certificate. You cannot get a tax clearance certificate without having a tax identification number. So pre-qualification are bidding and bidding for government contract. You want to bid for government contract. You have interest that government should award a contract to you. You are looking forward to get a contract from government. If you want to bid for such contract, you have to provide evidence of your tax identification number. So all these are the transactions that will be required where they will ask for your tax identification number. Do we understand? So open a corporate bank account. Hello,
Yes, sir. We can hear you, sir.
Okay, please, I'm sorry for the interruptions. So now let's look at tax clearance certificates. What do we understand by tax clearance certificate? We have looked at tax identification number. Let's quickly look at tax clearance certificate. What do you understand by that? Tax clearance certificate is a document issued by Federal Inland Revenue Service or issued by State Internal Revenue Service to individual or to company, showing that the applicant tax affairs are in order. What tax clearance certificate means is a document issued by the relevant tax authority, which can be FRS or SRS, State Internal Revenue Service, to a company and individual, serving as an evidence that the company have complied, the taxpayer have complied with all relevant tax legislation. So when you have paid your tax, you are not having any outstanding tax. You are filing your tax return regularly. You don't have any tax query. Tax authority will issue you a tax clearance certificate. And this tax clearance certificate is serve as an evidence that you have complied with all the relevant tax law. So it will serve as an evidence that you have complied with all the relevant tax law. So tax clearance certificate is normally issued by tax authority, which can be Federal Inland Revenue Service or State Internal Revenue Service. It is issued to taxpayer, which can be either company or individual, to serve as an evidence that that taxpayer have complied with all the relevant tax obligations and so on like that. So that is the reason. Tax clearance certificate is issued annually, every year. Tax authority issue tax clearance certificate to company and individual. Tax authority issue tax clearance certificate to them every year. Tax authority issue tax clearance certificate to them. In this tax clearance certificate, it will show your tax history for the past 3 years. It will show your tax history for the past 3 years. And this tax clearance certificate normally expires every end of the year, which is 31st of December, every end of the year. So that means for the new year, you have to collect another tax clearance certificate. So the tax clearance certificate normally run from 1st of January to 31st of December. Once it's 31st of December, the tax clearance certificate is expired already. Please, let's try to mute our audio.
You get Maggie?
Please mute your audio. Hello, mute your audio.
Maggie 100 naira.
Please mute your audio. Now, what are the content of tax clearance certificates? What are the content of tax clearance certificates? What are the content of tax clearance certificates? Number one content of tax clearance certificate, the name, address, and taxpayer identification number. The name of the company, the address of the company, the tax identification number of the companies too. So that is the number one content of the tax clearance certificate. Another content of tax clearance certificate is the total profit of the company or the chargeable income in the case of individual. The total profit or chargeable income. If it is company, it is total profit. If it is individual, chargeable income. For the past 3 years, for the last 3 years, the tax payable of the company, the tax payable of the company for the last 3 years too. The tax paid by the company for the last 3 years. Why another content is tax outstanding, if any. The nature of business of the company will be stated there too. Why another one is type of assessment. Type of what? Assessment. Another one we have the expiring dates. The expiring dates. The date that the tax clearance certificate will expire. The source of income of the company. The source of income of the company. Why another content of tax clearance certificate is the name and designation of the authorizing officer. The name and designation of the authorizing what? Officers. So all these are the content of tax clearance certificate. All these are the content of tax clearance certificates. Now, what are the conditions for granting a tax clearance certificate? If tax authority want to grant you a tax clearance certificate, what are the conditions that you must fulfill before a tax clearance certificate can be granted to you? What are the conditions that you must fulfill before a tax clearance certificate can be granted? Number one condition, taxes have been paid up to date. Before they can give you a tax clearance certificate, that means you must have paid all your taxes up to date. Another condition, penalties and interest. When you have any penalties and interest for late payment of tax, that penalties and interest rates have been paid. That means the penalties and interest must have been paid up to date. Another content, return have been filed up to date. That means the company must have filed their return up to date. Why another content? There is no outstanding tax query. There is no outstanding tax query, tax investigation, or tax audits. These are the conditions for granting tax clearance certificates. These are the conditions for granting tax clearance certificates. Now, what are the transactions require presentation of tax clearance certificates? What are the transactions that require presentation of tax clearance certificates? What are the transactions? What are the transactions that if you want to do, they will ask you, go and provide your tax clearance certificate? What are those transactions if you want to do? just please provide your tax clearance certificate. Number one, application for approval of building plan. You want to apply for approval of building plan. They will ask you, provide your tax clearance certificate. Application for firearms license. You need firearms license. You want to apply for firearms license. They will ask you, go and provide your tax clearance certificate. Application for government loan. You need a government loan. Maybe you need a loan from BOI, Bank of Industry. They will ask you, go and provide your tax clearance certificate. Application for trade license. You need a trade license. They will ask you, go and provide your tax clearance certificate. Application for certificate of occupancy. You need a certificate of occupancy. They will ask you, go and provide your tax clearance certificate. Registration for motor vehicle ownership. You want to register for ownership of your motor vehicle. They will ask you, go and bring your tax clearance certificate. Application for allocation of market store. Government build a public market. You want to buy a shop from that market. They will ask you, go and provide your tax clearance certificate. Application for distributorship. You want to be a distributor to a company. They will ask you, go and provide your tax clearance certificate. Application for registration of limited company. You want to register a company as a limited company. They will ask you, go and provide your tax clearance certificate. Appointment or election into a public office. You want to go for election. You want to consult for governor or senator or house of rep. They'll ask you, go and provide your tax clearance certificate. Application for agent license. They will also ask you, go and provide your tax clearance certificate. Application for gaming license. They will also ask you, you should go and provide your tax clearance certificate. So these are the transactions that we require for presentation of tax clearance certificate. However, in the case of individuals too, the transaction that require that I mentioned earlier also apply to individual. But the one I want to mention now only apply to individual only. The one I mentioned earlier apply to both individual and company. This one I want to mention now only apply to individual only. You want to pay your school fees payment in abroad. Maybe you have a children in abroad, you want to pay the school fees payment, you need $1. They will ask for your tax clearance certificate. You need $1. You want to for personal travel allowance, PTA. They will ask you, go and provide your tax clearance certificate. For business travel allowance too, they will ask you, go and provide your tax clearance certificate. So what are the problems of obtaining tax clearance certificate? What are the problems of obtaining tax clearance certificate? What problem do we face if we want to get tax clearance certificate? Sometimes, if you apply for tax clearance certificate can result into additional assessment and demand for payment before the certificate can be issued. Tax clearance certificate will result into additional assessment and demand for payment before certificate. Another one, certificate often taking long period, most especially for state internal revenue service. If you need a tax clearance certificate, if care is not taken, it can take you for like 1 month before you can get the tax clearance certificate. But in the case of FRS, within 2 days, 1 day, you get your tax clearance certificate if you don't have any outstanding tax you want to pay. So that is another challenge. Another issue is authenticity of the tax clearance certificate. In most of the cases, some individual or company, they will not meet the requirement of collection of tax clearance certificate, and they will need the tax clearance certificate. They will now go and meet one staff of the tax authority. That staff, it will help them to generate fake tax clearance certificate. That staff, it will help them to generate a fake tax clearance certificate. By having a fake tax clearance certificate, when you take it to where you want to do a transaction, if they now verify, they will now observe that this tax clearance certificate is not authentic. So that is one of the challenges you face while getting a tax clearance certificate. So, ladies and gentlemen, this is all what we need to know on tax clearance certificate and tax identification number. So, do we have any question concerning this? The only in this my material, the additional thing I have about the tax clearance certificate and tax identification number, it was introduced by the new law, the NTA. It makes some amendments to tax identification number, tax clearance certificate. So I don't need to discuss it with you because we are asked to follow the old law while treating, while lecturing ICAN, you understand, for this diet. So what we have left in this material is relating to the new law. So I don't need to discuss that with you here. So do we have any question?
I have a question.
Good morning, sir. Good morning.
Go ahead. Good morning.
Good morning, sir.
Good morning.
Yes, sir. Sir, for the tax clearance certificates, you said that the FIRS, they issue it every year, which is 31st of December. So I now want to ask, for a company that just started, that they don't have much business or anything yet, will they also get tax clearance certificates at the end of the year? Because they don't
Yes,
have transaction.
they will get tax clearance certificate. So where they normally put turnover, it will be zero. Where they normally put profit, it will be zero. They can get tax clearance certificate. A new company can get tax clearance certificate.
Oh, okay, sir. So are they the one that will go and request for it, or the tax people
Once they
just issue
register
it
for
to them?
through the tax promas, once they
Yes,
register,
sir.
once they have a TIN, they have taxpayer identification number. Once they have that, they can apply online. And if tax authority review their record and they know that actually they are a new company, they don't have anything, they will issue them tax clearance certificate.
Okay, sir. Thank you, sir.
So any other question?
Thank you,
Yes,
sir.
sir.
Good morning, sir.
Good morning.
Sir, for the tax clearance certificate.
Yes,
Hello, sir. Can you hear me? Okay.
I
My
can hear
question
you.
is that, sir, is there any alternative? Maybe the individual, the
I can't
company
hear
does
you
not
again.
have. Okay. Can you hear me now?
I can hear you now.
Okay. I said, is there any other alternative for tax clearance certificate that you can use to carry out your transaction if you don't have the tax clearance certificate? Or maybe there is a delay
If
for you to have it. There
please
is
repeat your
another alternative. I said, is there any other alternative for you to carry out your transaction if you don't have this tax clearance certificate? Like you want to open you like you make mention of you want to pay school fees, foreign school fees, something like that,
there
and you
is an
don't have it.
alternative. If you don't want to get
Okay.
the dollar from the official market, from the bank, you can go and get it from the roadside bureau de change. So you can go and get it. There's an alternative.
Okay.
So any other question?
Yes, sir. My question is on this problem of obtaining the first problem that says additional assessment and demand payment before issuing this the certificate. So I don't understand that phrase, like additional assessment. Aside from 3 years, what are they assessing again?
If you are, see, tax clearance certificate is not automatically granted. Company will apply for it. Do you understand? Once you apply for it, tax authority will review your tax record. Do you understand? If they review your tax record, if they observe that you do not have any outstanding tax, they will give you the tax clearance certificate. But if they review your record, they now observe that, from your record, you have outstanding tax that you need to pay. You will pay the outstanding tax. That is the additional assessment. You also pay penalty and interest for the outstanding tax. So, like I always say, if you don't have a clean record as a company, you don't have a clean record, don't bother yourself to apply for tax clearance certificate. Because if you apply for tax clearance certificate, it's as if you want to open yourself to tax authority. You understand? Once you open yourself to tax authority, they will now go and review your record. They now say, this person, instead of him to pay 200,000 tax, he paid 50,000 tax. You have to pay the balance, and he will pay penalties and interest. If you don't know that your tax record is not up to date, your tax filing is not up to date, don't go and apply for tax clearance certificate. If you apply, you have yourself to blame, because they will review your records. They will observe. If they observe that you need to pay additional tax, you will pay. Do we understand?
Yes, sir.
Yes, I understand now.
Okay. So any other question?
Yes, sir.
So in the absence of no other question, so let's look at another area. Let's look at another topic. The other topic we are looking at has to do with tax return. The other topic we are looking at has to do with tax return. How do we file tax return? We call it tax return. That is the other topic we are looking at. Tax return. How do we file tax return? Tax return. What is tax return? What do we understand by tax return? So I've shared the material, tax return. We start with tax return is a form which a person's or organization present an account or income, present an account of income and circumstances used by tax authority to determine liability. Tax return is just a report prepared by taxpayer containing information on his tax affair for a given period for the purpose of complying with the tax law. The report that you prepare as a taxpayer that contain your information on your tax affair for a given period, maybe for 1 year, so that you can comply with the tax law. That report that you prepare, you will submit it to who? To tax authority. When you submit your tax report to tax authority, that means you are doing tax return. Every year, you need to submit tax return. There are some return you submit every month, like value-added tax return, withholding tax return is submitted every month. While company income tax return is submitted every year. So tax return is a report prepared by taxpayer containing information on his tax affair for a given period for the purpose of complying with the tax law. That is what tax return means. Type of tax return. What type of tax return do we have? What type of tax return do we have? We have personal income tax return, company income tax return, value-added tax return, petroleum profit tax return, and blah, blah, blah. These are the tax return we have. This tax return topic I want to lecture you is based on the old law, because that is what we are asked to do. It's not based on the new law. I would have discussed this topic since, because we have misconception whether ICAN will say the new law or the old law. That is why I have to skip this topic. But when we get information from reliable source that ICAN is testing the old law, I can now teach this based on the old law. Because the tax return in the new law have changed compared to the old law. A lot of things have changed in the tax return. So what I'm lecturing you now is based on the old law. So under the old law, we have different types of tax return. Personal income tax return, company income tax return, value-added tax return, petroleum profit tax return. These are the type of tax return we have. Now, let's look at them one by one. Personal income tax return. Personal income tax return is divided into two. One is called pay as you earn, while the second one is called direct assessment. Personal income tax return is divided into how many? Two. Number one is pay as you earn, while number two is what? Direct assessment. These are the personal income tax return company on behalf of their employee. Pay as you earn, they are the personal income tax return that arise from employment service, and it is normally filed by company on behalf of what? On behalf of their employee. This pay as you earn, we can look at it in two ways. Annual payee return, while second one is monthly payee return. This pay as you earn, we can look at it in two ways. Annual payee return, while the second one is what? Monthly payee return. In the case of annual payee return, these are the returns filed by company or by employer at the end of every year on behalf of employee. This annual payee return must be filed not later than 31st of January of the following year. Example, the annual payee return of 2025 of the year 2025 must be filed not later than what?
31st January
31st January
2026.
of, yeah.
2026. Now, what are the content of annual payee return? If we want to file annual payee return, what are the contents? Number one, completed from A. Completed from A is called income tax form return of income. Income tax form or return of income and claim for allowance and relief. Completed from A. Number two, content of annual payee return from H1. That one is called annual income declaration. Number three, content, schedule of tax deduction by the employer, which is going to contain the following information. Schedule of tax deduction by the employer, which is going to contain the following information. What are the information? The name of the employer. The name of what? The employer. The name of the employer. Taxpayer identification number of the employer. The name of the employees. Taxpayer ID of the employees. Total emolument for each employees. Consolidated relief. Tax deducted. Overall tax charge and remitted. Evidence of payment of payee tax in every month. Evidence of payment of payee tax in every month. Evidence of payment of business premises. For a new company, you will pay a business premises of 10,000. While for an existing company, you will pay a business premises of how much? 5,000. So when you want to file annual payee return, apart from the monthly payee payment that you deduct from the employee salary that you pay on their behalf, you also pay business premises. 10,000 for a new company, 5,000 for an existing company. Evidence of withholding tax deduction and remittance, if any. If you deduct withholding tax on vendor invoice, evidence of that. Evidence of development levy payment. Development levy payment is 100 naira per staff, 100 naira per employee. These are the content of annual payee return. Number one, content of annual payee return. Completed from A. Number two, from H1, which is annual income declaration. Number three, schedule of tax deduction from schedule of tax deduction from the employer containing the following information. While number four, evidence of payee tax, evidence of payment of payee tax every month. Number five, evidence of payment of business premises, which is 10,000 for a new company, 5,000 for an existing company. Evidence of withholding tax deduction and remittance on vendor invoice. Evidence of development levy payment, which is 100 naira per employee. So now, failure to file annual payee return by employer. What is the penalty? Failure to file annual payee return by employer is going to attract penalties of how much? when company fail to file when a company fail to file annual payee return, annual personal income tax return, they will pay a penalty of 500,000 naira. And the timeline, the deadline for filing annual payee return is 31st of January of the following year. Do we understand? Do we understand?
Yes, sir.
Yes, sir.
Monthly payee tax return. You know, I said payee tax return is divided into two. Annual payee tax return, monthly payee tax return. Monthly payee tax return. These are the returns filed by the employer on behalf of employee every month. How does that happen? The payee tax that the employer deducts from employee salary every month, the employer must remit it. They must remit it not later than 10th of the following month. Not later than 10th day of the month following the month in which the tax was deducted. That means the payee tax deducted from employee salary in the month of February must be remitted to the tax authority not later than what? Payee tax deducted from the employee salary in the month of February must be remitted to the tax authority not later than what?
The
10th
10th
of
day of the month following the month.
10th of March. 10th of March. Do you understand?
Yes, sir.
Failure to remit payee tax return, monthly payee tax return, failure to remit it, we attract a penalty of 10% for every month in which the failure continues. Failure to remit monthly payee tax return, we attract penalties of 10% every month in which the failure continues. Under the new law, these have changed. Under the new law, these have changed. Yeah, we are on the old law. So this diet, I can't wait for it to finish. It's just me that I practice tax. It's just convincing me. I'm supposed to have deleted all those old law from my head. Just be reading the new law, be engaging in practice. But ICAN is just drawing me back to the old law, old law, old law. Something that I've gone forever. It's no more coming again. By now, we're supposed to have been talking of the new law, what is in practice. So that is monthly payee tax return. You know, personal income tax return. I said personal income tax return is divided into how many?
2.
What are the two?
Direct assessments.
Payee tax return and what?
Direct assessment.
Direct assessment. All what we have been discussing since morning is payee tax return. So now we want to look at direct assessment. Now we want to look at direct assessment. Direct assessment is an assessment, is a return filed by self-employed person. A return that is filed by who? Self-employed person. Who are the self-employed? Who are the self-employed? Yes. The self-employed, they are the professional, sole trader, sole proprietorship. The professional like lawyer, accountant, surveyors, contractor, business person, somebody doing his own business, they are all self-employed. Anybody that is not under a paid employment, that person is a self-employed person. Their own return is called direct assessment return, and they file it once in a year. And their direct assessment return must be filed not later than 31st of March of the following year. Direct assessment return must be filed not later than 31st of March of the following year. That means direct assessment return for 2025 must be filed not later than when? 31st of March 2020 what? 2026. Direct assessment return of 2025 must be filed not later than 31st of March 2026. One of the changes under the new law is that the new law now said, this direct assessment return, it is not only self-employed that must file it. Which person was also included to file direct assessment return by the new law? Who can tell me? That is the major changes. One of the major changes in the new law under return when we are looking at personal income tax. Under the direct assessment return now include another person now that, you too, you must file direct assessment return. Who are the person that must also file direct assessment return apart from the self-employed?
Partnership.
An employee.
Okay.
Partnership normally file direct assessment return before. An employee. Somebody under paid employment. Under the old law that we had now, if you are under paid employment, your employer have a right to file return for you. Once your employer have filed return for you, you don't need to file any return again. You don't have business with any return. But under this new law, the new law, NTA, Nigeria Tax Administration Act, said if your employer have filed return for you as an employee, it does not stop there. You too, as an employee, you are now being included in the list of persons that will file direct assessment return, apart from self-employed. An employee now too will also file direct assessment return. Me and you, we are employees, we work in a company. We also file direct assessment return. If you want to, why they say we should file direct assessment return? We are going to file it by ourselves. It is not our employer that will help us to file this one. No. We file it individual by ourselves. Employer is not liable for this. The one employer is liable for is the payee return that they help you to file. Your own direct assessment return, even as an employee, you must file it by yourself. If you fail to file it under the new law, you will pay a penalty of 50,000. Under the new law, if you fail to file it, firstly, you will pay penalties of 100,000, and subsequently, you will pay 50,000. What we are saying is, why they said an employee should file direct assessment return under the new law. They said the point of argument is that some of the employee can have side hustle income apart from employment income.
Yes.
They said some employee can have what? Secondary income apart from employment income. Maybe your Saturday and Sunday, you are using it to do another job. That job that you are using it to do, when you want to file your direct assessment return, you file income coming from your employment, which your employer have already filed. You also file it in your direct assessment. You also file any other income you have. Maybe you have a property, you are collecting rent from that property. That rent you collect, you must file it as an income to you. It's income outside your employment. So that is what changed on direct assessment return. Now, what are the content of direct assessment return? That means content of personal income tax return filed by self-employed person. What are the contents? Duly completed self-assessment form. Duly completed self-assessment form. Duly completed income tax form, Form A. Which include statement of income earned in the preceding year, statement of income, relief, and allowance in the preceding year, declarations. Why number 3, evidence of payment of tax. Number 4, evidence of development levy payments. Number 5, withholding tax credit notes. Number 5 is what? Withholding tax credit notes. So these are the content of return filed by self-employed person. And under the old law, the deadline for filing self-employed in return is 31st of March, which is still the same thing under the new law. But the penalty for filing return, for late filing of self-employed return is 50,000 naira. So, ladies and gentlemen, this is where we are going to stop today. I have 1 or 2 things to attend to. So by next week, when we come, we are going to start with company income tax return. So do we have any question? Do we have any question?
Okay.
Sir, for the direct assessment.
So in the absence of no question,
Hello,
you can
sir.
call it. Yes, I can hear you.
I said for the direct assessment, you said to file their return is at the 31st of March. Is it for the following year or for the
Yes,
same
for the
year?
following year.
Okay, sir.
31st of March of the following year.